It's actually 10 years now that Gav first coined the term Web3. We have people here from all kinds of blockchain communities and blockchain application verticals. We have people here from all kinds of open source and free internet, the communities around cryptography, but really come together under a shared vision.
I'm an engineer by training. I spent some time in German automotive before joining Parity. This is back in 2016, 2017. So Parity at the time was still called Ethcore. We were very focused on Ethereum core technology, as the name implies. And then at some point, towards the end of 2016, beginning of 2017, we've gotten increasingly interested in Polkadot and really launching our own network. I spent a number of years at Parity then helping build the organization, build the tech, build the ecosystem, especially later on. I eventually, in 2021, left Parity, joined the board of the foundation, and that role then has ultimately led me to joining the Web3 Foundation as the CEO towards the end of last year. The Web3 Foundation is a not-for-profit foundation based out of Switzerland. We are, generally interested in nurturing technologies that get us closer to Web3, so a freer, a more private, a more user-controlled internet. Our primary projects is really Polkadot and sort of the related technologies. About 50 people. We do research, we do education. We're really interested in thinking sort of 2 years, 3 years, 5 years, 6 years ahead in where could this technology be going? Where should we be really thinking about more radical new ideas? And then we're quite involved in distributing capital. So making sure that other people have the financial means to, then develop out these ideas, market those ideas, all sort of centered around this larger goal of realizing Web3 through Polkadot. Web3 has evolved a lot, right? So when we started the Web3 Foundation, the word was used a little bit in Ethereum land, but really not all that much. And I would say it took till maybe the DeFi summer, NFT craze kind of cycles of blockchain for Web3 to really catch on as a term. And, for us as the Web3 Foundation, I think we're coming much more from sort of the original cyberpunk, so Snowden revelations, trying to build an internet freer of corporate control, government control, and so on. So it's more that Web3 vision. There's often a romanticization of sort of the early days, right? When it's just a small group of people and no one knew where it's going to go, and you had sort of anything was possible. And I think there's now also a whole world that is Web3 that is much more aligned with some of these traditional institutions, right? So we see, Bitcoin and Ethereum be much more integrated into the traditional financial systems and so on. So it's less about tearing down and rebuilding and more sort of integrating into the system. So we're now in a world where there's much more talent, there's much more capital. You don't have to figure out everything from scratch. You can just look at what other people have done and what has worked, what has not worked. So we're also in a world that's just much more efficient, much more mature, right? So I think those early days were great, and I'm very glad I was part of it. But to actually get things done, bring value to users, and then get closer to that vision, we're just much closer today than we were 2 years ago, 5 years ago, 8 years ago. The Web3 Foundation was founded in 2017. The first iteration of Web3 Summit happened in 2018. It happened again in 2019. 2020, COVID hit. And then we kind of lost track of the event. And now it's 2024, 5 years later. And we brought it back. And it's a very different kind of event. I think even calling it a conference is kind of misleading. There's lots of unconference styles here. There's a hackathon, there's arts installation, there's games, there's a lot going on, but it's a gathering, I guess, of like-minded people in the Web3 space. And it's really a place to gather people that are generally aligned around the vision of Web3, but might be from very different communities and very different corners of of the Web3 space. Those communities are often too busy fighting with each other about the approaches on how to get to where they generally agree on where we want to get to, instead of sharing ideas, challenging each other constructively, and actually working together to get there. So Web3 Summit is really a way to create a space for people to do that. And I think we sort of like put out these 4 rules of like no pitching, right? Don't sell a product here. That's not the space to do that. Like if you want someone to buy your token, it's probably not the right event. No bitching. So like if you want to like just trash talk other people, it's probably not the right event for you. No sponsors. Like you don't see any like big logos or anything like that plastered around the walls here, and also no kind of like hidden commercial agendas or anything like that. And we generally want it to be sort of like a maximalism free environment. Like we don't think we have all of the answers to say, hey, this is the right solution. We're all still figuring it out. And so, everything goes in terms of opinions, as long as you have good arguments. If you look at sort of like funding sources in the Polkadot ecosystem, they split, I guess, roughly into sort of like 3 buckets. One is what's there in the on-chain treasury and what the community controls. And that's a lot of what's funded there is kind of like common good projects in service of the Polkadot ecosystem. There's the Web3 Foundation. And we have we're optimized for a long-term runway, really like 5+ years to support the Polkadot ecosystem without touching any of our crypto. But then we also have capital inflows, like we have investors investing into the ecosystem that is independent sort of like from those 2 funding sources. And then there's a lot of stuff sort of like on the margin of that.
10 years ago, I worked in a bank. I was head of portfolio management for investing in hedge funds. I've invested with a lot of hedge funds over the years. I would never, ever invest in a fund that was only there because it was a hot market. But I listened to a podcast, and it was Tim Ferriss interviewing someone called Naval Ravikant. And he's a guy that created AngelList and was early in crypto and he spoke about wanting to invest in technology because that was what was largely responsible for the improvement of the human condition. And then a kind of a light went off for me where the ICOs was starting to happen in 2017. And most of them were not good, but some of them were very good. And I thought, well, if there would be a way to access the deal and a way to assess whether it was real, like the story they were telling, because they were telling all kinds of stories. Is it even possible? And if it is possible, could these guys even do it? And the person that I knew that was in blockchain, like an insider, was a guy called Ed Hesse. This was early 2017. And he brought 2 people with him. One was Gavin Wood, and the other one was Aaron Buchanan. And this was before the launch of Polkadot, but the white paper was already written. I said, okay, well, this is something that's really compelling and something I would want to invest with myself, to have as a traditional investor, to be able to access this in what I thought was an intelligent way. People would see that right away and want to invest in it. And I knew all these hedge fund managers, and I thought it would be easy to raise money from them. But it was really hard to raise money from them because they're smart and they don't invest in completely unproven asset class. But over time, we're proving ourselves, and blockchain is proving its viability. Because there's a whole bunch of different risks, and some risks you're willing to take as an investor, right? So if you invest in something and it doesn't make it because the market is too competitive or the market goes in a different direction, well, shit happens and bad luck. You didn't pick the right one or whatever, that opportunity wasn't there. But if there's something else, like something illegal or fraud or misrepresentation, well, then probably you didn't do great research, and that's a way you shouldn't lose money. To being at the forefront of technology and to invest there, and to have the discernment to be able to invest in something that is real and that is viable and that has potential for mass adoption, is a place where you can get outsized returns. And Polkadot is very strong on the fundamentals. They have done things in a sound way from technology building, but also a sound way from a regulatory and legal perspective. So we invested in Polkadot. That was our biggest investment. Energy Web was our second biggest. Ocean Protocol was the third biggest. The way we invest, not everything's going to make it. That's the nature of venture. But for something like Polkadot, it is going to be there. The Web3 Foundation is a very serious foundation. It's well capitalized. It'll still be here in 5 years. It'll still be here in 10 years. And it'll still be stewarding the development of the Polkadot technology and ecosystem. And because of the decentralization, there are a lot of grassroots activity happening that wasn't happening before. And so we're really excited about that. There's a lot of people in the ecosystem that are really strong, like world-class, starting with the developers, but also the businesses that are being built on Polkadot are world-class. And it will take time to get adoption, but the pace of improvement is accelerating. It is super risky, and nobody should invest in this unless it's money that they can lose. The way it works is that, it's only the marginal buyer that sets the price, and then we extrapolate a market cap based on the most recent price. Bitcoin is a really good example. When you see, Germany come in and sell a very small percentage of all of the Bitcoin, and then the Bitcoin price goes down by 10%. It's like, wow. So I think that's one of the issues with saying, okay, well, the crypto market cap is 2 trillion, 3 trillion, something. I mean, these are huge numbers, but that's all based on the marginal last trade. So the depth isn't there yet. And once there is real value happening, then it will be there. And probably the best example is the stock market, where you look at companies. Some companies trade on speculation, on like, okay, this is a biotech company, and if their drug is successful through trials, then it can generate crazy amounts. So we'll value it here, and as the trials are going well, and then if the trial goes bad, then it goes down. Where all the way to the other side of where there's like a dividend, the company's generating cash and paying 5% dividend, and that is something that is underpinning the price of the stock. Because if the price of the stock would go down by half, then it would be generating 10%, as long as the business isn't changing, and that will have people come in and buy it. Whereas something that's purely speculative would need speculators and the right economic conditions for people to have this extra money to come in and speculate on things. So it's different, and I think crypto is almost purely speculative. Not everything, like you can generate yield in some DeFi, and I think like borrowing and lending is a place where there are real sorts of yields, but otherwise is that underpinning isn't quite there yet. As an investor in anything, something that's not working out, get out of it right away. But something that is working and going well and getting better, you invest more even as the price goes up. And that's the way to be a really successful investor. If you know something has long-term value creation potential, you can stay in it, and through a bear and through a difficult time, and then when things turn and get better, that will still be there.
OpenGov is an important capital distribution mechanism in the Polkadot ecosystem, but it's by no means the only one. And I think, if anything, it's also the one that is supposed to be a little bit more experimental, a little bit more out there. Things that maybe the Web3 Foundation wouldn't fund, things that maybe investors wouldn't fund. So we should expect experiments there that may or may not work. I would say, it certainly has changed what the Web3 Foundation's relationship is to the governance system. But today, I sort of see as like everything that can work through open governance and sort of like the on-chain governance system should probably be going through that, right? And we should push that system to become better and better. But we shouldn't be dogmatic about that. I mean, there's some things that are just very hard to do on-chain. And you need that integration into the real world to really make them happen. So the Web3 Foundation is really here to plug the holes, if you want, right? To jump in where that's not really working well. And given that we're at the very early stages of that, right? Really, OpenGov was launched in 2023 proper. So those holes are still pretty big, right? So we're really here to jump in where it doesn't work and help figuring out how we could get to a world where more and more of that can work through OpenGov. If you're a standard limited sort of like organization and you receive, $1 million on chain from this DAO, you might have tax authorities or anti-money laundering authorities that ask, like, where's this money coming from? Who's the counterparty? Are those guys terrorists or on some watch list or whatever? And, you say like, oh, it's this like on-chain DAO. They're going to be like, that's not enough. We don't know what that means. We need like a real counterparty that we can check, right? So one thing that you see that's really part of the process of trying to mature this governance system is the whole concept of DAO Wrappers. So we now see in the Polkadot ecosystem another foundation actually emerge called the Polkadot Community Foundation, which is really a sort of like a legal wrapper around this on-chain DAO that can be that counterparty, right? So like if you want to do an agreement with the Polkadot DAO, right? There's now an actual counterparty, like another foundation that can receive that funding, whose directors are voted on through the on-chain mechanisms, and that is a real legal representation of this otherwise vague in the ether kind of on-chain DAO. And maturing Polkadot governance is not just writing a bunch of code and hoping it's more mature. It's also deeply thinking about how we can bridge the gap between this on-chain world and just a legal and regulatory reality that we have to interact with. Decentralized Futures it's a funding program of the foundation. If you think about sort of like prior to this new strategy of Decentralized Futures, how did the Web3 Foundation distribute funding? The primary means was through a grants program. That was a relatively static process based on milestones that says, okay, you built an open source tool or an open source product. When you hit those milestones, you get a certain amount of funding, but it's very structured, relatively static, and relatively low amounts. That's a good process for certain kind of things in the ecosystem. Now, there's all kinds of things we want to see in the Polkadot ecosystem where this process is not super helpful, right? So it's, for example, not super helpful if you want to build a business in Polkadot. It's usually not enough money. Often you need the money kind of upfront, maybe more like an investment, so that you can then go and do something risky. You really want risk capital rather than sort of like grants money. You might be willing to even give part of your company or project away to get that risk capital. So a standard grants program just does not allow for that kind of flexibility, right? So what we've done with DV is kind of like flip the table and say, hey, here's a bunch of money. If you want to do something interesting in Polkadot, tell us what that is, and we're going to figure out the mechanism, right? Rather than tell you the mechanism prior, we want to hear from you what you want to achieve and how much money you need for it. And then we're going to build a little bit the mechanism around your needs. So it's just it's a more ecosystem focused way of deploying capital. But yeah, the truth is also if you fund 50 teams and a lot of that is risk capital, you should also expect some of these teams to fail, right? So if we say, hey, we funded 50 teams, some amount of those teams will not be able to hit their milestones, will not be able to deliver work on par. That's also part of the process, right? So intentionally in many areas, we're spreading funding a little bit broader than we would maybe otherwise do, to then see who's really good, right? And double down on those. So it also allows us to get some competition amongst some of these things and see who's doing well and who isn't. So one of the key kind of requirements in DF is that everyone who applied had to answer the question of like, how do you think this is going to be long-term sustainable? And depending on what you're planning to do with your project, those answers are obviously different, right? 1 year is not necessarily enough to get there, right? So some teams might need bridge funding to get there. So Decentralized Futures being sort of the start of a new strategy. And now we've launched a new ecosystem fund, so a fund solely focused on driving value to the Polkadot ecosystem rather than just a sort of like a deal by deal view. Even this ecosystem fund it's not the end of that strategy, right? It's really the beginning of being just much more active in the world of venture capital and investment funds that will allow us to bring more capital into the overall ecosystem.
The real idea of it is not only as just a siloed fund that's trying to make money in an undervalued ecosystem, but the idea is to do very good research on very good teams and good business projects, and then share that research with other investors and try to bring them in as co-investors. So that's one of the main functions that I see. Also, our early function that we'll do is liquidity provision in the ecosystem, borrowing and lending, because without like a vibrant and active DeFi ecosystem, then it's much harder to do everything else. Why do we need liquidity? There's enough that anybody can trade. But if you're a big institution, it's not enough. I've spoken with large institutional investors. They won't write a check for less than $50 or $100 million. And liquidity isn't nearly enough for them to invest because they know that if they ever wanted to sell, it would take them a long time to get out and it would move the market. The technology itself is still being adopted by many very good teams, right? They're not connecting to Polkadot yet, but they're using Polkadot SDK or substrate. And there's a long list of big names and successful projects using this technology. And now with the evolution to Jam, it'll be much more accessible for other teams, for other developers, and have a real chance to fulfill the initial Ethereum vision of a world computer. And as Jam gets more awareness, I think it's going to generate a lot more activity and a lot more business and value being created there as a result.
In the past, the way we funded implementations of the Polkadot protocol, we essentially said like, oh, we want to fund a bunch of dev teams and we're going to pay your monthly or yearly or whatever fees for your developers, and then we hope that you eventually get there. We now have a very different strategy. We say, here's a spec, and really you implement against that specification, and if you achieve that, there's a bunch of money, there's a very juicy orange carrot at the end of that road, right? But you first have to do the work. Jam, at the core, compared to how Polkadot currently looks like, Jam has one very big advantage. Jam is much simpler, right? It might not seem like that if you try to make your way through the Jam paper. It seems very complicated, but really it's much simpler than how the Polkadot core protocol looks like right now. What it allows us to do is really very clearly specify mathematically how Jam should look like from the get-go, and then have more teams implement that mathematical specification really in code. And we put out prizes for that. So Jam Prize is an initiative, ultimately to realize Jam. And it has all kinds of benefits. One is we'll have multiple implementations of Jam, hopefully from the get-go, which means that if one of that implementation is buggy or is not working, or one of those dev teams is dropping out because they're not interested in building it anymore or whatever, we still have many other implementations to take care of it. The other benefit is what if there's a disagreement, right? If we are not quite sure how we want to keep evolving Jam, well, now we don't have tons and tons of power in with the hands of one implementation team, but rather we have multiple implementation teams and really one source of truth with a spec. And then thirdly, you get money when you achieved what you set out to achieve, but then you get much more money, right? So we're trying to get people to take more risk, but then have also more reward in exchange for that. Partly also because we want to do it fast, right? We want to attract very competent teams that can do it quickly and can do it well. So that's worth something to us. A few years is so long in crypto. I don't know, it's really hard to talk in few years. But I'm pretty excited just about seeing what's going on in the social fabric of Polkadot at the moment. We have, just lots of community members and companies that build in and around Polkadot that are really stepping up and becoming kind of like core organizations of Polkadot, right? We are moving really away from this world of just the Web3 Foundation or just parity being at the core of it, but really an ecosystem that has 5, 8, 10 really well-resourced, well-staffed core organizations that push this ecosystem forward, that really take ownership for the success of this ecosystem. And we really see just the beginning of that right now. I think too many people think oh, right, these technologies are sort of by itself good, right? They're going to bring good into the world. And I just don't think there's really good or bad technologies. And there's decades, a centuries-old debate and political philosophy around trading off security and freedom, right? And so if you develop technologies that ultimately give more freedom into people's hands, it's also going to give more freedom into people's hands that might do something bad with it. We're playing with sharp knives, right? And whether you're going to cut your cucumbers with it or going to stab someone in the back with it, that's the part that we have to figure out as an industry. And all of this stuff is dual use. All of this stuff is very high stakes. And so I do think the industry would be well served for thinking a little bit more about how this stuff is being used, and maybe some of the larger scale, more philosophical implications of the technology.